All right, all right, all right. Here we are. The Fed not only, announced their 50 basis point rate hike, which we all probably expected, at least ones of us that were paying attention and following this kind of stuff. More importantly, what they said, right? And we knew that what they said was going to be as important, likely more important than what they actually did, right? So their talk about how they're going to run mortgage-backed securities off their balance sheet, when they're going to start. The most important thing in my mind, and the thing that moved the market in a way that helped mortgage rates, was them saying, like, listen, we're not considering a 75 basis point rate hike. He literally said it's off the table. And so that was something that was friendly towards bonds. I've had so many real estate conversations, so many mortgage conversations. I think that there's, a lot of stuff moving and changing, both in mortgage and in mortgage rates and in housing inventory and in housing demand, housing supply, all of it, right? So many moving pieces that, like, the one thing we know for certain is we're going to have an interesting year. I listened with half of my ears to Jerome Powell. I'm like most people, I'm sure, where it's not like, super engaging conversation talking about the economy and some of the granular areas of it. But, they've got a job at the Fed, and he kept going back to, like, he wants monetary policy. He doesn't want to overcorrect, right? 75 basis points, 100, and be so restrictive that he causes, disruption. He uses the term soft landing, right? And so he's like, we're going to have price stability. We're going to get it down to 2% inflation. Our mandates are strong labor market and price stability. But he used that term or that language around, not being too aggressive, right? But then praised Volcker, saying, like, the guy did what he had to do to tame inflation, which I think most of us are probably in agreement that inflation is worse than they initially thought, than we initially thought, than even the headlines or the data might suggest. And it's going to take a lot of action from the Fed to tame that inflation. People are always like, oh, the Fed is going to increase rates by 0.5%. Like, what's that going to do to mortgage rates? Are they going to go up, 50 basis points for tomorrow? No, we already knew, right? We knew this. We knew this was going to happen. Look like no shakeups. Nope. 50 basis points for future meetings as well. Yeah, I think it's going to be like they talked about June. They're going to start running mortgage-backed securities off their balance sheet. That was kind of an expected thing too, where that wasn't really like any big news. I think the talk was conservative, right? And that's where we saw, the 59 basis point positive that we saw today on mortgage-backed securities was because, the Fed, like, 75 basis points, we don't think we're going to need that. And then you can always default to, like, we're going to see what happens. We're going to see how the market reacts. All right, June POC. Do you think rates will go down the next month now? No. Today was, for all intents and purposes, fairly, normal volatility, where folks will tell you that the long-term trend is up for mortgage interest rates. Will they be lower in 12 months? They might well be, right? And so I wouldn't necessarily advise somebody who's buying right now to pay 2 points to buy their rate down to 4.5, right? I saw something the other day. Somebody sent me a loan estimate from Texas, and their loan originator having them pay 3.75 points up front to buy the rate down to 4.5. Don't do that. Number of reasons you don't want to do that. It's a sunk cost that you can't get back. But the simplest explanation for it is if you can refinance into that 4.5 or even lower 12 months from now or 18 months from now, all the money you spent today is gone. It's a sunk cost. Next month, I don't think rates are lower. They won't be lower in any significant way. No chance on earth you're going to have a 4.5% rate a month from now. So if you're asking because a refinance doesn't make sense now, but you want to see if it makes sense a month from now, or if you're like everybody I talked to in 2020 and 2021, where they're like, I'm going to time it. I want the very lowest rate. If I talk to you in August and I'm like 2.625, you've got to do this. Like 30-year rates just cannot get much lower. And then you waited and they went up a little bit. Like, I'm going to wait till it gets back down to 2.6. And then went up and went up, and went up. And then by the time you were really ready, it was 3.875 and you had done missed the train. Don't do that. Did the hike affect HELOC rates? 100%. And this is where, this Fed funds rate hike is going to increase anything that's tied to, like HELOCs are tied to an index, right? Those rates are going to go up. I just got a notice from Robinhood where like, hey, our margin rates are going up by 0.5%. Of course they are, right? So margin rates, HELOC rates, you're going to see, more expensive like rates across the board, really, with credit cards, with car loans, with all of it. But greatmortgagebroker.com. That's where you go. Fill out the quick form, where you're at, how we can help. We're licensed in 46 states. Check out the channel if you've got any questions on mortgage. 600 plus videos, trying to educate you, trying to shoot straight from the hip. All things real estate, all things mortgage. If you got questions, feel free to reach out to me. I'm on Instagram, TikTok, YouTube, all the places. Thanks for joining. And until next time, we gonna see.